Good evening, everybody. Welcome to this evening's XAUUSD Securities webinar. Sorry for the delay and a few technical issues. So welcome. Tonight's webinar is forex trading live market analysis, which we'll get into in a moment. Just to give you a heads up what's coming up this week. Tomorrow we will be going through a webinar on understanding a candlestick chart and identifying candlestick patterns. That will be at 7 p.m. tomorrow, Sydney time. And we've got more live market analysis on Thursday at 7 p.m. Sydney time. So those are the webinars for the week. All right, if you don't know me, then my name is Duncan Cooper. I'll just get you to read through the risk disclaimer before we move along. So if you're on our YouTube live stream, I cannot see your chat if you're there, but you're more than welcome to join us in the webinar. I've given you a link. Any questions through the webinar, just for those in the webinar room, just to the webinar chat box or the question and answer box. I've got both open. So I'll just give you all enough time to read through the disclaimer. All right, we'll move along, I think. All right, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and training mentor here at XAUUSD Securities, and I'm a full-time forex trader. I've been trading forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is down on screen, duncan.cooper@acy.com. And I'm probably mentoring for nearly more than 15 years, getting towards, but definitely more than 10. So if you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me on our website. Go to acy.com market news tab. You'll find my analysis there. Or go to our YouTube channel, ACY Securities Australia. And as well, you can connect with me personally on Twitter and LinkedIn there if you wish. As well, through the week, you can connect with us in our Telegram channel. If you'd like to get access, just contact Nathan Bray. His email's at the bottom of the screen, but I'll put it in the chat momentarily. That word doesn't want to come out right tonight, so in a moment I will give you that. So Nathan's address is at the bottom, but I'll give it to the chat in a moment. If you want access to my MT4 chart layouts and templates, the ones I'm using in the webinars and in my education webinars, then as well contact Nathan. So I'll put his details in the chat. And if you need help setting up a demo account, or you want to ask about a live account, just contact Nathan. He'll answer any questions you might have. So his details are there in the chat. All right. So as well, coming up tomorrow evening, after our normal 7 o'clock webinar, we have the Inner Circle webinar, which is normally open just to clients, but we're opening that to everybody. So if you're in the 7 o'clock webinar, I will have a link for you that you can move along to that next webinar. Normally we have clients on the mic helping them with their trading, their strategies, whatever they want to talk about. So whether or not you can get on the mic will be up to Nathan, but you'll be able to listen in. You can type questions into the chat box and we'll see them coming in. And it's really a discussion about trading, helping people out who are trading, okay? Part of the ACY community. All right, so that will be coming up tomorrow at 8. All right, let's get into. First of all, I just want to discuss the news now. When I go through my analysis tonight, I'm just going to go through levels that I'm watching, any patterns that I might be looking to form. I'm not going to get too bogged down into very close time frame trading tonight because we have a very large risk event coming out at 10:30 p.m. So I'm not going to be taking a trade before then. It's really going to be a question of what does this event do, and then where's price after it, and then what starts to set up over the next few days. Now, there's a number of risk events you need to be aware of. So I might not trade until after the FOMC federal fund rate. So we've got the 10:30 p.m. Queensland time tonight, US CPI data, month on month, year on year, and core CPI. Governor Bay speaks at midnight for the pound. Tomorrow afternoon, we've got the pound news GDP. Further risk event from the US, we've got then 10:30 p.m. US core PPI and PPI. So this is all inflationary figures. This is all inflationary figures tonight. And then at 4 o'clock in the morning, we've got the US FOMC statement. That's the interest rate decision. So all these US events coming up tonight, tomorrow night, early Thursday morning are high risk events. Price can move considerably one way or the other, not necessarily with the trend. All right, so that's why I'm going to be waiting. I'm going to be waiting past each event to see where price is and what it's doing. I'm not going to be taking a position and holding it in these events. And we also have, if you're trading the Euro crosses, we have the Euro interest rate decision and press conference in the evening on Thursday. So high risk items coming out this week, so be aware of those. And you can go to Forex Factory and set this to your time zone and make sure you know where they're all coming out. So the big one for tonight is the CPI data. So let's have a look at the charts. And we'll take a look at, first of all, the dollar index, which is kind of in the middle of the range from the weekly perspective here. Weekly support down here, weekly resistance at the top. Now, last month we had a very good month up, and I'm kind of monitoring to see whether we can follow through for another good month up. It's debatable. We could go either way at the moment. All the data releases last month, CPI, inflation figures, job figures, interest rate decisions, all favored, generally speaking, the US moving up. Now, will that be the same this month? Well, I'll have to wait and see what the next few trading days bring. But we are just turning to the downside here on the day chart. But what I've been monitoring, I just need to go to my 4-hour chart to draw it in. This is last month's low, and we traded all the way up pretty much to the high of the month. Last trading day of the month, we finished at the top of the month pretty much. All right, so if you think about it, this is the candle range of last month, the whole candle. All right, there it is. So this is the same in any time frame works, but we're just trading back inside the trading of last month at the moment. Now, depending on what price does over the next few news events, we could certainly dip down deeper. And the level I'm watching, back to my day chart, is this 62% level of the trading range from last month, and overlaps with day support at 102.35. Now, I don't know whether we're going to move down to that level, or when the news comes out today, we could just trade straight back up. But if it offers a very nice corrective move down, that's an area I'm going to watch just for the dollar index to start to hold. And as we get into the euro dollar, you'll see there's the inverse kind of look to the euro dollar, giving you a very good level as well. So I'm just monitoring what this is doing at the moment. You know, from a weekly perspective at the moment, where after the rush up last month, we're just correcting some of that move at the moment. We're sitting in the middle of the range. All right. But there's a day chart negativity there at the moment. That could just continue all the way down, but I'm watching that 102.36 level here. If we do get a significant dip, does this area just there, this old resistance support, does that hold for a pullback to the 62% fib, maybe for the bottom of the market? We'll have to wait and see. All right, so I'm just monitoring that at the moment. Certainly the S&P 500 has moved beyond the monthly top. So we could say now this is clearly in a bull market. If you go to your monthly chart, it's taken out the most significant lower top here at the moment. So the market's definitely maybe factoring in the idea that there's no more interest rates coming around the track, rises from the FOMC, and, you know, long term, maybe we're going to hold, or maybe going to see a cut at some point. In any event, certainly the stock market's moving up on the monthly chart there. Most clearly now, higher tops and bottoms, and the day chart is up here. Now, it's overextended, so if you want to trade this to the upside, you know, you need to be looking for measuring and looking for a dip. All right, don't be buying at the top of a move. And the only question to the overall move would be, it's always worth having the resistance level here that we theoretically moving above at the moment, 4323.23. 423. That can't be right. 4323. All right. The only questionable thing would be, whilst we're moving above that monthly top at the moment, does the FOMC statement come out and raise interest rates? If we do, we'll probably drop straight back below that level. Then the question will be what happens at 43.23 when we try to move back above it. Do we hold and fail? So we could ultimately deal with a false break here, but at the moment it's clearly starting to move above. So, you know, looking to buy a dip would be the go, not buying at the top and not buying just above resistance there either. So it's not really in a position to buy. You maybe should have been buying some of these dips previously to get long on that at the moment, but there's a clear uptrend there at the moment. All right, so with the idea that the US dollar may have a dip to that 62% level, I just want to talk you through the euro dollar. Now, the euro dollar last month had a very negative month down, and we're just trading back up inside it. Trend on the monthly here is lower top, lower bottom, and that's a significant lower top there. Traded actually down to this low here at 106.35. That's where we paused at. And we pretty much started the topping out last month. I just want to find out what day it was. Just to prove the fact that we pretty much topped at the start of the month, which was the 3rd of May, and we traded down to the 31st of May. All right, so whilst we're seeing a little bit of an upturn here, my overall bias is this whole range. So that is the high of last month to the low of last month. And I'm just monitoring where we're moving up to within that whole drop of last month. Now, this is the inverse look. There's a 62% level up here at 109.16. There's daily resistance here at 109.09. It's just the opposite look to the dollar index. So when we're only 100 pips away from that level, we could move 100 pips. I know when we've been having CPI data coming out in previous months, the first 15-minute candle's been 15 minutes. Has been 100 pips high. So we can certainly get up to 109.09 today. Azu, hello there. So I'm just going to be monitoring up here if we get a magnificent spike up there. All right. Yesterday, well, in fact, yesterday, which was Monday, Thursday, sorry, Monday, Friday, Thursday, we were really struggling trying to get above 108. Well, we couldn't get to 108. Today, we are above at the moment, but there's a little bit of an underlying bid as we wait for the US news to come out. So we're trading just fractionally above 108. Now, we might not get up to 109. We may simply drop. But we're trying to plan where you could trade as these news events come out. In line with the monthly drop of last month, you know, selling at a higher level, 109.09 area, looking for that level to fail if we were to spike up there. All right. At the moment, I'm just sitting on my hands and waiting for the news event. All right. You can see prices been moving up here through London. All right. Now, in actual fact, the whole drop of last month, we're only at the 38% level. So whilst we're showing an uptrend, we've got a long way to go up to the general fib levels of the 62% level or the 79. All right. So we might not get up to these levels. We'll have to wait and see. All right. So just monitoring that. But you can see that at the moment, we're having most definitely an uptrend. What I did notice on the 4-hour chart was we are at the top of the current 4-hour swing. We're at the 127 extension. So, you know, in any event, I'm not going to be buying, even though this is high up on the current swing, because there's a news event coming out. So I'm just going to be seeing if it can move to a level that I like after the news. All right. 109.09 is a level I'm watching up here. All right. And let's have a look at I've got Euro yen next. Now, at the moment, I'm just not trading this pair. It's, you know, if I go to where the major levels of resistance are, to your monthly chart, we've been trying to take out this top, 149.77. I'll just delete the line. So I might get rid of that. There we go. Got my monthly levels in. We've been above and below this level over the last 2 or 3 weeks. There's a major level of resistance over here, 151.70. I think that level is 151.70. Then we've got a weekly top at 151.61. So we stored it there, and we've been above and below this top countless times. And we can see last month we were negative. So That trend is up, but a negative month last month. And, you know, if you draw a fib in, you're very much at the high profit taking point. There's a 127 extension at 152.45. There's your upward move. There's your pullback. And, you know, that's the profit taking portion of the monthly chart move. So it's very choppy up there at the moment. I don't really want, you know, if you're going to be a buyer, if you're assessing your time frames and looking at the structure of where the dips occur and where the extensions move up to, this is the profit taking area of the pair. That's why I haven't been trading it. It's at resistance from the monthly chart. It's at the higher level of the profit taking on the fib tool. It's got a higher chance, and then we had a negative month last month. It's got a higher chance of moving down at some point. So your weekly trend, it actually put in a lower top here, which we could obviously move up above, and then it switches back to up. So I will just be monitoring at the moment this top up here, which is 151.063. You know, we might not get there. We might just fall short of 151.063 and turn around. It's been able to put in the potential of a lower top. Are we going to move above it to swing the trend back up, or are we simply going to come a fraction short, stall, and then want to move back down? So the day chart trend is up here, but as I said, the position on your monthly chart there is it's in the profit taking area of the chart. So do you want to be buying so high up? All right, if you want to be buying so high up, you have to look to your 4-hour chart. And, you know, we're actually as well quite, you know, got a bit messy in here, but maybe there's a 4-hour range here where we dipped on down here. And we'll be on the 127 extension of that range. So everything's extended at the moment up here. All right, but if you want to be a buyer, you need to look for the next dip. So keep dragging your fib up and then look for a pullback if you want to look for a buying opportunity. All right, but for me, it's very choppy. I will just be watching the high end area up here. We know up here is where the major monthly level is. So for me, this is where all the sellers are going to be. I'm not wanting to short it just for the sake of shorting it. I just know this is too high up at the moment for me to be a buyer. I could entertain a short if I saw a very good setup in this area start to form in the chart. All right. So if you want to be a buyer on your 4-hour chart, get your fib drawn in and look for a pullback. And just from a news event perspective as well, if you just go back to Forex Factory, we do have on Friday the Bank of Japan policy statement rate decision. We can often get fireworks when that happens at some time in the afternoon, early afternoon, around about 1:30, I think. There's never a definite time, but it's around about that time. So, you know, a lot of these pairs have got fireworks coming out at some point in the week. So depending on what type of trader you are, if you're trying to position something, that could have a very cost-effective effect on your trade. All right. So maybe there's still an upward bias there. Just look for a 4-hour dip, I would say, on the euro yen. Let's hop over to the euro pound. Euro pound's at a major level of support. If you go to your weekly chart, we were below. This is actually a monthly low, but they're weekly lows, and we're actually below there at the start of the week. But I did a video on Monday and said, yeah, we might hold the downtrend, but this is a clear level of support to the left. Don't be surprised if you see a false break. Well, we've probably had that false break. Whilst this is still structurally in a downtrend on the daily, a big outside reversal candle to the upside at both monthly and weekly support. You can see all these daily lows to the left here. You're probably looking for an opportunity to trade back up from support. If it moves back down to support, that's the higher odds trade here at the moment. So what I'll be doing is looking at the 4-hour chart and drawing a fib, that outside reversal candle, and we've moved up fractions of days there. Look for a pullback. 62% level overlaps with weekly support at 85.65. You've also got day support here, 85.67. So what we could maybe see is some form of left shoulder here. We call that a left shoulder. We could call this an inverted head. down here. And then you can monitor to see if a right shoulder comes in at your weekly support level, 85.65. Day support's at 85.67, and your 62% fibs about 85.62. So this area here, you can look to that area for a right shoulder. Okay, a reversal back up from monthly weekly support there. All right, let's have a poke into the pound crosses. Now the pound had a very nice sell down yesterday. I did put this out on Telegram today. This is the range of yesterday. These are the levels I'm watching. We've already had one news event from the pound, which has pushed it above the first level I was watching. And my second level is a little bit further up now. Just want to hop to, sorry, I just have to get rid of some stuff off here so we can see. I just want to show you that. Let's get rid of all these lines at the moment. Last month, we had a negative month. And now we're trading back up inside, very much like what we were seeing on the euro dollar. And well, you can see through here. See how we were down month here? Sometimes we trade all the way back up inside the range of the previous month. And then we're down the next month. All right. It's not a guarantee that because we have a down month, we have another down month. The next month we can trade all the way back up within the range of the previous month, but we don't take out the high of the month. All right. And maybe that's potentially what's happening in this month. Or, we can break above the high of the month and continue up. But at the moment, with the euro dollar especially selling down last month, and this pretty much traded down for most of the month as well. So that was last month's high to low here. The day trend has turned back to up, but noticeably yesterday, so put my lines back in. We're having a bit of a contentious time at these resistance levels. We closed back below 125.46. We held at this one to the left at 125.83. Got a fraction above. Held there Friday, Monday. And notably, we traded up within a pip or pretty much at the 79% retracement level of last month's range, which was down. Okay, so we did hit a significant price pressure point there yesterday. And we had a significant sell-off, turning that 4-hour trend to down. And I said this morning, when you get these very large 4-hour candles down, you'll often retrace most of that back up. And the levels I've been watching for price to maybe hold at was 125.46, but the news popped that up when the claimant counts came out from the UK. So the next level's up here at 125.83. Now we don't know what the CPI data will bring. This could just blow price straight beyond this area today, or we could come up to at least test the high of yesterday. We really stopped. Yesterday's high was 125.992. The fibs at 125.998. So pretty much approximately a pip short of the 79% level and the figure there. All right. And had a massive drop. So that means that the sellers are clearly watching that level for whatever reason. They know that that is a high point within the range of last month. And if we're going to have any downward pressure, that would be a great opportunity area on the chart to take a trade. So we don't know what the data will bring later in the day, but 79% level, I'm going to get rid of this fib so I don't have two fibs overlapping each other, but the 79% level is pretty much at the 126 level. That's definitely a level to watch today for another test up there and a hold and fail. As well, that was, that hardly pulled back yesterday. Then that was when the news came out at 4. And we're kind of stuck between the 79 and 62. So the area at the moment that's holding, when the news comes out, I would watch this area first of all. Does it come up to this area and start to hold after the news? It could come up to the high yesterday, hold. But yesterday, the market said this area up here was very expensive and wanted to drive it below those two, back below those two resistance levels. All right, so If nothing really comes out that's US dollar negative, we could still spike up. And then what does price do after that? If we start to fail in this area up here, we could then see another movement down like this today. Now, of course, if it comes out US dollar negative, this is just going to blow north and you won't be able to get in. So structurally at the moment on the 4 hour, we are in a downtrend. Whether that structure will hold when the news comes out is another matter. But, up at these high areas are the areas to watch to trade. And this is already starting to form a lower top, but I wouldn't be clicking in right now with the news coming out because anything could happen when the news comes out. I'd just be patient. All right, let's get over to the Aussie yen, which after last week's interest rate decision has not had a day down yet. Now, I know this looks up and I'm not suggesting we should be selling yet because that day chart trend is very strong. And you're going to have, your weekly trend is turned up, but we are heading towards, now this fib is drawn across the actual downtrend here of the monthly chart. We actually moved to two lower bottoms here. So if you're looking at pure trend in terms of retracements, this is a retracement against the last monthly fall down here. All right. So I'm just monitoring as it heads towards the 79% level, 95.78. Price could just move through those levels and beyond. I'm not suggesting we're selling at the moment. I'm just taking note of where price is within the larger picture of this most immediate monthly rundown. As well, there's this larger range here. So, in matter of fact, both of my 79% fib levels overlap in the same area. The bigger one from high to low and the smaller one in here. All right, so whilst we're moving up, I think it's worth noting, what's the structure as you move through the time frames. That monthly structure is suggestive that this is maybe going to come up at some point for a lower top. Now, that won't be suggestive on the weekly chart because this is an uptrend and so is a day chart. But, you can see these tops over here. I'm just planning for the rest of the month at the moment on this pair. 95.73 approximate area through here, we had triple tops and a further rejection. So the market, 79% levels at 95.78. That level's at 95.73. If you get up to there, that is definitely not where you want to be buying. Maybe want to be starting, if you are long, that would be a great area to take profits at because that could definitely be a point on the chart where we falter. So at the moment, though, we are in a definite uptrend. This is now up 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So do you want to be buying after a 9-day move? Probably not. It doesn't say that we can't be buying. We just have to wait for a dip. The most logical dip would be back to weekly support at 9300, 9303 in through here. So it's just again patience on the Aussie at the moment. If you have to trade it, you have to look for 4-hour dips. But this is very high up. What did I say? 9 days up. It's very high up. Do you want to buy on the 10th day up? If we have another day up, you could be looking for dips within the 4-hour ranges that are forming. If you have to trade, I would much prefer to see a deeper dip back to a clear level of support. That's at 9303, and then what happens there? All right, with the news events coming out this week, it's not a stretch of the imagination that we couldn't this week actually get up to 95.73. We're only what 120 pips away. We can easily get there this week. And doesn't necessarily have to have any days down. So the more it doesn't have any days down, the higher chance that we will fail up here. All right, because the more this is getting stretched as it's moving up. So if this doesn't have any days down, this is then watching that area for maybe a 4-hour structure change to trade back down up at that level. So a couple of options. We could trade down to this level, hold to further move up, or we simply don't dip and then we're watching this level up here. That's what I'm doing at the moment on that pair. All right, now the thing that's going to maybe stop this moving up will be the Aussie dollar, which has been moving up, and it's contending with the level of resistance here, 67.71, and lots of resistance. We had this double top form last. So May's interest rate decision happened in around about here, and then we ran up to test 68.05 high, traded up to 68.17. Some of us maybe are thinking this is moving up and through, but then of course we held and we had a significant decline. Now we could simply be moving up to this area to hold once more. We're moving up from a lower point. I've got no idea if this is going to hold here or move through. I'm just waiting to see what price tells me. All right. Are we going to come into this area here? Hold, 68.05, that high there. Do we come up to 68.05, hold, and then turn around? This is where the sellers are going to be sitting and waiting to sell, all right, like they did last time. Now, we could blow straight through when the news comes out through the week, but this is such a logical area to expect selling pressure to come in now. Yesterday, we traded up 2 pips above 66.71. All right. Today we're getting a little bit higher up. We've traded up to 86, but we're trading at 67.74, 75 at the moment. So it's just holding above 66.71. You can see yesterday we rejected that level. If we get another candle today, by the end of the day, that's showing a very large wick on the candle, then we may be looking for a reversal here. And a reversal for me would be starting to look on the 4-hour chart for a structure change. Now, we're not having that structure change at the moment. So, but that structure change would need to look like, let's just get rid of these lines. This is higher top, higher bottom, higher top, higher bottom. So this is an uptrend. So, I'd need to see a break of a bottom, and then I'll be looking for some kind of form of, let's say that's the final top. We don't know if it is yet at the moment. We might run up higher yet, but let's just call that the final top for explanation. Wait for it to drop down and break a low. That's the current swing point low. And then you look for a 79% retracement in an ideal world. All right. Now we don't have that yet. And we might not have that. We might blow straight through above the May top. But again, like I was discussing on the euro dollar, that is the May high and that is the May low. All right. So we're just trading all the way up within the trading of last month. And see how we got a little bit of support there on the fib. All right. So through the course of this month, let's say we do top out up here. At some point, if I'm going to be selling, to maybe trade all the way back down to here, if that's what the market wants to do. If we get a complete failure up here to trade down, I want to be in to the short side if it starts to turn over by that 79% level. All right, because that's going to maximize my opportunity to get the best risk reward to trade all the way back down. All right, so there's plenty of time to get in. Really, however you get in and however you structure it, if you do start to turn over, I'll be looking to try and get in by the 79% level, 67.40. All right, that might mean this comes down to 6,700, and it might rally back up to 67.40. Let's say that's the high that forms. If it came down to there and it comes back up to there, you could sell there, stop above the high. That gives you very good risk reward if we do move all the way back down to the low that we came from. Now we don't know if you can get to that low, but you wouldn't have thought that we would be all the way back up the range from last month's sell down. So the market can clearly move all the way back up the range. It can clearly move all the way back down the range. And this is where the sellers are going to start to engage if they're going to take control. All right. So just start to watch this area from 67.71 up to 68.18. That's your resistance area for potential reversal. And you can see, just because you take a high out, you trade above a high does not mean we're coming up to here, because we traded above that high and then traded down. We traded above that high and traded all the way down there. So we could trade above this high here and still trade all the way back down. This is rather range bound. And this is clearly where the sellers are up here. All right. The other thing I was looking at on this pair was the whole range of the year that's been forming is there's a 50% level in here as well. All right. So that's 6807. So there's another little factor in there as well that could offer some resistance in there. So halfway back up, the whole move down for the year. All right, so you can watch that. Cover the euro pairs, cover the pound pairs. What's that pound doing? Still trying to pop up. What's the euro at? It's not moved much since we've been discussing. All right. New Zealand yen. Now, if we look at the monthly charts, and get rid of some of these lines. So this isn't a clear range-bound environment. It's not easy at all. You want to try and trade the outskirts. It has been debating with weekly support and resistance, but now it's moving back above those levels. So what you can see to the left here from the monthly perspective is all these highs to the left from last year. This is what we did last month. We came up to the top there and traded into the middle, big rejection. So you want to look, now that we're moving back up within the range of the month, you want to look up to the highest point of that candle. All right. So draw a fib across the whole candle. And we also failed at this daily resistance level over here, 87.20, 06. We could well see price come back up to there. Now, if I'm just looking at the outskirts of the range from the monthly perspective, clear monthly range there. We failed at the top last month. We could fail fraction short this month to trade back down. Now, the long side here, if you want to look to the long side, let's just talk about long side before, because if we are going to move up, there is the long side to talk about. You could be dragging your fib up on this day chart range because it's in an uptrend and look for a dip. Because at the moment, understanding the fib tool, we're at the 127 extension or beyond. So this is in the profit taking of this short-term upward move. So, doesn't mean to say that we can't continue up, but logically, if you want to be a buyer, don't buy at a high point at the moment. Look for a pullback to maybe a 62% level or a 79% level for, maybe a move up to that top once more. For myself, I'm just going to monitor where we got the maximum amount of selling pressure last month, which is right at the top there. So, 87, what is it, 87.31? We got a fraction short of monthly resistance, 87.20, and down to 8,700. Can price get up to there? I'm just going to monitor that through the month, like I'm monitoring the Aussie yen now. If I start to see that price stalls at the 79% level and structure starts to change the fire chart, I can watch 86.49 to be resistance as well for a turnover. All right, so I'm just looking at the outskirts of where price failed last month. Can we fail in the same area this month? New Zealand dollar. This hasn't moved up as much in any kind of imagination or extent to the Aussie dollar. That's because we're not expecting any more interest rate rises potentially, whereas we might get another one on the Aussie. But that fib's drawn across the range of last month. We're only at the 38% level, where of course we know that the Aussie's at, it's above the 79 at the moment, so it could well meet the 100% level. All right, so this is a lot weaker. Just monitoring up here at 61.79 level, it's broken support. All right, we're moving it back above weekly support at 61.10, so that is offering support. The last two trading days on any downward move over the last 2 days have been getting support from that area. So any dip down today, you might well see 61.10 hold of support to move back up. And I'm just monitoring up here 61.79. This area of hold support through here. All right. It's a lot more slow going, that one. Doesn't mean to say that we can't move up. All right, dollar Canadian. And I've got $2 Canadian charts here. So let me get rid of one. All right. We've all traded all the way back down to the weekly range. We had a very surprise from the Bank of Canada last week, had an interest rate hike unexpectedly. Same with the Aussie, unexpectedly. And we're very range bound. We're back down to weekly supports, trading down from weekly resistance. All right, weekly supports down here, 133.14 down to 133.01. Even deeper down to 132.62. Weekly resistance up here at 136.54. So I put this out this morning on Telegram, but when the CPI data comes out, we may see another dip down to 134.14.01. We could well hold. Last 2 days have held there, pretty much traded at the 133.14 level. So are we holding here to trade all the way back up to the top of the range? Now, the 4 hour, we've had a structural change. I actually discussed this last week in trade setups for the month before. When we came to support here last month, we had a bounce off support and then a 79% retracement here. And then we moved all the way up to the top of the range. So what I'm looking at is the same thing here, is structurally we've turned to up here on the 4 hour. So it's actually a higher bottom there and a higher top. So I'm watching the 79% retracement down to support. Do we get this same sort of price structure to move off and up? All right. Now at the moment we trade down to 62 level, so we may not get there. You know, we don't know what the news is going to bring. You have to determine, do you want to be in before the news comes out, or are you just going to wait to see if price will be kind to give you an entry? Because if the US dollar news is US dollar strength, it's not going to dip down to the 79. It's already been to the 62. It'll just spike north. So I'm just monitoring. And you can watch it on your 15-minute chart if you want. So that's 79% area down to support. It's 133.29 down to 133.14. You can see there, it did have a very heavy reversal back up intraday at the moment from the 62 level. So maybe it's already bottoms. But I'm monitoring down here for a spike later in the day. All right, dollar franc. Now, to the day charts. In fact, just worth looking at the monthly structure of this pair. See last month's reversal to the upside from, we're in a range here from over a decade, approximately a decade. We're at the bottom of the range, the decade range, showing a reversal last month. And, you know, coming up off monthly support from over here, couldn't quite get down to the lower level. And we keep trying to trade above this level, 90.84. Are we going to see a reversal from the bottom of the range? We could be trading long term all the way up to the top of the range if this reversal is going to be able to maintain itself. The weekly trend here is down in terms of tops and bottoms, but we're starting to get support at the 90-100 level. And we may well form a higher bottom here, potentially, maybe. We actually traded pretty much from 90 up to 91 this week already. All right. And as I drop down to the day chart, I said this on Monday in my video. All right. This area through here, which was support, we broke below, became resistance. It was resistance here, has become support. Yesterday's trading pretty much traded on top of that. And we did close back up. We actually closed above monthly resistance at 90.84. And we've got weekly resistance at 90.59. So this is just a difficult area of resistance. It's not the best area just to buy in. Buying down here on the day support level would have been great yesterday if you had that line drawn in. So at the moment, the 4-hour trend here is now up. You could monitor this range when the news comes out. It might dip down to a 79% level. That's just structurally up there on the 4-hour. Nope, 79 is at 90.26. It could dip back down to 90.02, which is your day support level here. So the area we'll be watching, if we can get a friendly dip, back down to support. So 90.26 down to 90.02, and then see what happens. All right, dollar yen. You can see here, I've got daily resistance 140.44 and day support 138.74. It's stuck right in the middle. I'm not doing anything with this pair at the moment. We've got the bodge coming out on Friday. We know if the bodge comes out with anything that's like US dollar strength, they come out with any kind of a sniff of, okay, maybe inflation's just ticking up a little bit, and they're suggestive of maybe even just tinkering ever so slightly with interest rates, then this will drop. Usually when last time we had that sort of conversation from the bodge, it dropped 500 pips. All right, so I don't expect this to do much before the bodge, although we've got the FOMC statement coming out. Just look to the range that it's trading in at the moment. And you can see, when you're in the middle of a range, clear day supports, clear day resistance, you want to look to the outskirts. This may well just hold its support if it moves down to trade back up, or trade up to the top to trade back down. This is probably not going to do too much. Unless the FOMC statement is a lot different than expected, this may not do too much. It may just well hold to that range. It's probably more looking to whatever the Bank of Japan wants to do. If the FOMC statement comes out and it's just US dollar positive all the way, which is going to keep that massive interest rate differential between the dollar and the yen, then this will probably break north. All right. So the market is looking to two events, the FOMC statements and the bodge. All right, so I'll be leaving that alone till after the bodge. Long term at the moment, your weekly trend here is quite clearly up. All right, so be a brave man to try to short that, I think, or woman, in the face of that trend and in the face of the interest rate differential. Okay, unless the bodge comes out with some policy statement saying this is way too high and they're going to tweak their policy, then this will probably remain with a slight bid through the month. But at the moment, you can see that it's very range bound. All right, let's just finish on gold. All right, this is exceptionally range bound at the moment. I don't think it's actually hit the boundaries that I was talking about last week. But let me just get rid of my box. All right. All right, if you've been following gold, you'll know that from the monthly chart perspective, potential triple top up here, outside reversal candle to the downside, massive rejection, and on a weekly chart, 1, 2, 3 tops. Structurally from the highest swing points that my chart shows here, higher bottom, higher top, this is potentially a higher bottom here. So it's been sticking around for the last 4 weeks, 4 to 5 weeks at this support or resistance level at 1959. And it's holding at 79% retracement level of this range that we false broke. So and you can see here in the day chart, we're getting higher bottoms and lower tops. We're getting some kind of triangle pattern here in some form. And we're going to see a breakout one way or the other. At the moment, though, it does not know which way to break. We might get a clear break from this week's data, but I mean, for me at the moment, when you get this kind of narrowing triangle, I've got no way of knowing which way that's going to break. I just have to wait for a break. All right. Of course, you can take a punt. You could be a buyer or a seller here, but you know, if you're selling, you probably want to put your stop above the high up here. If you're buying, you want to put your stop below the low here. All right. With price action of last month, the massive rejection, that in my mind would maybe suggest, you know, if I was going to punt, which I'm not going to, but maybe to the downside from the monthly candles perspective, but it could break either way there. So you want to wait for a clear, decisive break, and it's not giving you that. And the longer that goes sideways, when it does break, the longer move you're going to get from the break. All right. So I know some people have been trading this on gold and they've been struggling. They say, you know, I've been having lots of losses on gold at the moment. Well, it's because price action is so unclear. I've got no idea which way that is going to move at the moment. So wait for a clear break. All right. All right. So at the moment, we definitely have uncertainty. We have news announcements coming out that can drive price either up or down, not necessarily in line with the intraday trend that we're seeing right now. So from a risk perspective, the best thing to do, you know, if you just head back to the news items is, you know, first one up today is the CPI data. Tomorrow we got the US CPI data. So then you've got 24 hours after the first one to maybe start to look to structure some form of trading. And then we've got this PPI data. And then after that, we've got the interest rate decision 4 o'clock in the morning. Now, this CPI data, if it comes out, we're expecting no interest rate rise at the moment. But if CPI comes out, if it, you know, year on year, expecting to move down to 4.1, if that is better than 4.1, substantially better, that might be suggestive that we could get an interest rate hike. You know, month to month, we're expecting 0.4 to 0.2. This comes in at 0.4, 0.5, or, you know, that's all going to point to US dollar strength and the potential of an interest rate rise. All right. So the market at the moment is, I'm guessing, just factoring in that this is what's coming in and that we're not going to get an interest rate hike. But the market's perspective can quickly change if these figures come in drastically different to what we're expecting. All right. So, you know, buyer or seller beware at the moment. Doesn't matter if you can't trade for 3 days while you're waiting for all these risk items to come out. You can have your chart set up with key levels, waiting for a clear, maybe candle rejection signal or a pattern to form from a level that price is reversing from, and then off you go. All right. Azu, you say you're waiting. Slav, I can see you on there. I'm guessing you're waiting till after the event. I'm fortunate in that, if I go back to the euro, well, I say I'm fortunate at the moment that I do have a position on the euro from high up last month. I got short at 110. So I'm just hoping that I've actually short at 110 and 109. I've taken profits on my 109. And I've just got something in the bag from 1010. And I'm hoping that the very strong move down for the euro last month is going to move into another month down this month. But we'll have to wait and see. I've got plenty of room, certainly for this first news announcement, to hold my position. I'll have to reassess as the days roll over. So, but we're definitely seeing an upward bid at the moment. All right, it's trying to hold above 108 at the moment. Pound dollar, it's not doing too much now. It's at that 79% level. Aussie, you know, 4 pips above 67.71. So it's still, you know, it's holding at its resistance here at the moment. And as I said, even if this spikes above 68.17, that does not mean it's going higher. You can see, you know, price action spiking above here and here, and we still managed to move all the way down. You know, on the Aussie here, even if we had potentially the market's looking at maybe another interest rate hike, but the other side of the coin is we keep raising interest rates, we're going to go into recession potentially. So then how does that affect the currency as well? So we'll have to wait and see. We may well start, stay in this very much range bound choppiness of coming up to the top of the range to move down. So we'll have to wait and see. Yes, it's interesting. S&P 500 is broken above. So, the stock market at the moment is potentially anticipating maybe that the Feds maybe come to a pausing point. And, those that maybe been buying stocks think long term that the interest rate cycle is going to start to head down. So, yeah, we've got plenty of balls in the market at the moment. If we were looking at just last month, there were plenty of sellers in the market last month, especially on the currency pairs. So it's like we've had this massive switch, central banks coming out, raising interest rates when we're not expecting it. So last week we had the RBA raise interest rates unexpectedly for 2 months in a row. The Canadian bank raising interest rates unexpectedly. We're not expecting the Fed to raise, but they could have raised rates as well. They may have the overall determination that look, inflation's still there everywhere in every country. We really need to crush it. Maybe they're just going to come out and give us another raise unexpectedly on Thursday. So, but we'll certainly get a good look when the CPI data comes out this evening, and then we might be able to have an educated guess if they are going to raise interest rates on Thursday. All right, so as I say, very risky at the moment just to open a trade. You want to get past these news items. It's better not to lose money than take a trade thinking, I want to take a trade because I don't want to miss out on a big move when it comes. But you don't want to be on the opposite side of that move, do you? So it's always worth just knowing where the risky days of the month are. And the next 3 trading days are very risky from a news perspective. If you can see a short-term trade that you're happy to take, great. But more, if you're trading any kind of position, it's very risky just opening a trade in the face of these news items. So I'll leave that thought with you. Other than that, tomorrow we'll be going through the topic of candlesticks, and it might be a good time for a refresher on that because we may well see some candlestick patterns starting to form at some of these major resistance levels. So that will be coming up tomorrow at 7 p.m. City time. If you have the time, I look forward to seeing you there. Okay. All right, everybody, thanks very much. Look forward to seeing you next time.